HIMS, the stock market darling, gets murdered on earnings day. It's time to cover it, guys. This is Chill Deal Trades. I use my 12 years of experience to help you succeed in the market. So let's dive into things, because as always, this video is going to be long. I came up with a little fun saying here. Will growth slow, or is HIMS and hers actually him? That's how you know I'm old, because I'm using really old jokes. But I truly do believe HIMS is the front end of the change of the healthcare space for the next generation. I've made videos over the last 3 weeks telling you like HIMS is the next generation, kind of some price levels I was looking at, but we're going to do a deep dive today. A few of the things we're going to cover today, this is the wrong title, not updated, but a little bit about HIMS. Will HIMS be a long-term winner? Let's look at their earnings and give it a grade, and then last but not least, technical analysis. Look at the charts. We're also going to look at a few other things, but we'll get there. Portfolio update before we get started. Added a couple stocks this last week, so portfolio's still doing pretty good. A couple stocks have pulled back a bit with how the market, but I've had a few stocks go up. So kind of trading spaces still, we're having a killer year so far. Question: should I start a Patreon? Maybe like 10, 15 bucks a month, which you'll gladly make back a year. That kind of show my trades, what I'm holding, when I'm buying things, when I close things. Let me know in the comments. I want to know. Okay, let's hop into things. Firstly, management team. I don't cover this enough in these deep dive videos, but we want to invest in teams that have a killer management team with a proven track record. That last part is really important. A proven track record. Just look at a few of these people. Uber, Google, Bonobos, Google, Zola, Walgreens, healthcare companies, obviously medical, Nike, Tesla, Aurora. It's like, guys, this team has talent from the top businesses in the world. Management team is crucial to the success of a business. Next thing, HIMS is the healthcare stock for the next generation. I'm going to highlight something really important here. What's important to the next generation is mind and body connection. Mind and body connection. And that is what HIMS is going after. We're on a mission to help the world feel great is more important than actually being great. I want to highlight that, but feeling great through the power of better health. And kind of diving down into some of their categories. So this is evolving, but sexual health, hair growth, dermatology, women's dermatology, mental health, weight loss. Like, these are the future categories of healthcare. Like your traditional wellness checks, going to the doctors, still these one-off things will happen, but these are the segments for the next generation. We know mental health things have skyrocketed over the last 10 years. Weight loss is kind of resurging, but in new ways. Sexual health that's a whole, cultural thing, but that is blowing up. So this company is positioned to the future of healthcare. They're in the key categories and they're expanding. And kind of going back to the point again, like the next generation values different things from their healthcare companies. An entirely new platform that makes feeling great personalized, accessible, and affordable. One thing that has, I think, changed culturally is people feel that healthcare system is fraudulent. And so I believe the reason why platforms like HIMS has been successful is because people now feel like it's more affordable. Doesn't mean it is, but it feels like it's more affordable. It's more accessible, right? Like, you don't have to go anywhere. You can be at home. You can be on your phone, and personalized, which I think will help greatly in this wave of AI that's happening, but a personalized, accessible, and affordable. And that is what HIMS is building their platform around, which is the next generation's what they're looking for. Kind of going into the different products as well, weight loss, sex stuff, regrow hair, anxiety, smoother skin. Like, these are the things that are really top of mind for this next generation. And HIMS is just expanding their product line, right? Cardiovascular care, that's a new one. That's a huge market. Now, at-home lab work, that is a huge one. Doing more acquisitions for peptides creation. Like, HIMS is on the front foot. They're 2 steps ahead of where the industry is going, and that's why they've built this lead so far. What we have to remember is that the healthcare industry is hundreds of billions of dollar category. These things right here, HIMS is only 7 years old, a couple billion in revenue. Guys, the companies that do these products in the long term, if they can build the trust for the consumer, hundreds of billions of dollars, trillions of dollars as a category, hundreds of millions is a potential valuation for a company like HIMS in the long term. I want to highlight one other thing that's really important. This kind of goes to margin. We'll talk about it in a second, but HIMS has amazing margins. You see what they're doing here. Generic drugs of what has been really popular historically, right? Like Viagra, Cialis, drugs for mental health, like antidepressants. They are going generic. Generic's cheaper. The legacy companies that used to own these categories can no longer have the rights to be the only person, and that's when drugs go generic. And what HIMS is doing is they are branding generic drugs. So typically what you would buy at like a Rite Aid or something, for $15 or something, HIMS is building a brand around and creating monthly costs for these things. So yes, it is still affordable because they're generic drugs, but they're creating these monthly systems, recurring revenue with generic drugs, which are creating amazing profit margin, in the high 70s to 80s profit margins. For an e-commerce company who's spending a lot on marketing, this is my domain. This is where I live. This is what I do in my day-to-day life. Margins are key, and this is going to let HIMS continue to spend a shoot ton on marketing because they have the margin to do it. Next. The same kind of message here, but this was taken from an article of HIMS site and just kind of going into the modern medical care and what it means, right? The individual's ability to control their own destiny. We're hitting with destiny. We're hitting with healthcare, personalization. Healthcare is currently one of the only industries where consumers' voice isn't the most important in the room. Right? Like we've had finance, we had consumer, we've had all these trends over the last, 15 to 50 years. And I do believe healthcare is the next thing. And HIMS has the opportunity to really own this category in this next wave of accessibility and personalization. Innovation, right? Like they said, menopause, that could be a next direction they go. We know what's happening with the treatment of chronic illnesses, with AI, with the way that I would say over the last 20 years, how biotech has formed and solving illnesses that typically didn't have treatments for. And then last thing is AI. So we know that this AI boom is happening. It's working its way into software now. It was just hardware. Now it's software. HIMS is going to take advantage of that, which will help their margins. But kind of just this bottom paragraph, this is from the HIMS site. Healthcare is transforming to be more consumer-centric, and HIMS is leading that transformation. We believe every individual should have access and affordable care designed for their individual goals. Individualized, personalized healthcare is the future, guys, and HIMS is hitting that. Affordability, accessibility, and personalization. I want you to remember those keywords because that is the future of healthcare. A couple more recent news. If you haven't seen it, you need to see it. HIMS acquiring at-home lab testing. Okay, global market for at-home lab testing. Look at these numbers. Billions and billions. And a decent CAGR. 5% is decent, I think, with at-home. And some of these companies like HIMS starting to adopt this, that's going to grow more. But this is a multi-billion-dollar category for HIMS to get into. And because they already have the platform to do it, they are going to help. This is going to help grow their revenue a lot. Typically, what you see companies do is when you start seeing acquisitions start to pick up, two things. One is because they're making a lot of money, so they can now acquire, and it's cheaper to acquire than build yourself. 2, they have to keep up their growth rates. So even though I think, HIMS will still have a really amazing growth rate for 25 and 26, when we start getting to 27, they're going to have to start making more strategic acquisitions to keep that growth rate growing. And we know with HIMS, the key is going to be new categories. And so we're starting to see this category expansion, which is really key and a great thing to see from HIMS. It shows their management team is seeing the future and they're making the right moves. One of the big things that's come out in the news recently, right? No more GLP-1s. I think this will have an impact, and that's why you saw earnings down so much. Because when we looked at the earnings, we did see a really large growth happening because of GLP-1s. Their year-over-year growth was 69%. GLP-1s basically was like 15% of that growth, which is pretty amazing. I do believe that they're going to find a way around. FDA declares that the shortage is over, and so the market is now closed, like other people can't do it because they still own the rights. But I do believe that HIMS will find a way around. This isn't a quote about HIMS. HIMS has been positioning itself to continue to sell compounded semaglutides using personalized dosage. Personalized dosage is key there. What did I say? Personalization, affordability, essentially, and accessibility. It is now critical to understand HIMS' legal pathway to selling personalized dosages. They're going to find a way around. I do believe in the short term it's still going to impact them, but in the long term they're going to find a way around. And if you didn't know, they do have an oral weight loss medication, which still is making decent revenue for the business. So short-term pain, long-term I think they'll be okay. Next, into earnings. Okay, mostly killer growth on the earnings. They had a really amazing 2024, right? 2 million subscribers now. The one thing I want to highlight, what I just mentioned, was the GLP-1s. So excluding revenue from GLP-1s, revenue increased 43% compared to holistic 69%. That is a decent hit from one drug. And so when we look in the future and I talk about them acquiring other companies, this is really critical to know, is that they are going to have to find a way around this GLP-1 issue. Like I said, is it different medication that solve the same issue? Do they have medications that actually do something better than GLP-1s? Like, they're going to have to find a way around this because we did see it bolster their revenue in 24. And I do believe that's why the stock is selling off, because people are realizing, wait, that's a really large percentage of their growth. This company's been growing at, 60, 70 plus 80, 90% year over year. 43 without GLP-1s, growth is slowing down and they need to do something about it. Okay, let's give their business a little bit of scorecard. Subscribers, 45% increase year over year. Come on, guys, that's amazing. And in Q4, 3 checks for that. Monthly online revenue per user, $73 this year, $53 last year. They're doing an amazing job upselling customers. This is a really key to e-commerce. Like, you need to get that AOV higher. And so monthly online revenue, 73 for the year, was at 64 versus 54, 90%. That gets 1 check. Not the greatest, but amazing job in the second half of the year to start increasing. And we see that here, AOV, $168 versus 103, 63% in AOV. That is why they made a ton more money on their net income and their cash balance. Like, that is an amazing growth for the year. Even seeing 41%, 2 checks. Honestly, 63%, I think I left out a check there. Net orders, 21% is not that exciting. 22%, still great, but you do see a lot of the revenue made up in this AOV. Will they be able to see the same AOV without the GLP-1s? I think that's why people are selling off this stock in the after hours. The stock does need to come back down to earth. We might be over the 100% growth year over year. We'll see. But there are still a lot of great things to see here. Online revenue, 98% year over year. Just insane. 71% for the whole year. I mean, that's just amazing growth for this company. Marketing costs, right? Like, marketing costs almost up 100% growth. I live in the marketing world. Marketing is getting harder. It's getting more expensive. They own the space, but we need to keep an eye on these marketing and operational costs. As the business grows, it's going to become more complex. And so we need to keep an eye on this to see if we see marketing expenses start to outpace revenue growth. And if so, their margins and things are going to get hit more. HIMS in review. I think I left out one slide here. That's okay. For 2025, they still do see really significant growth, which is a great sign. But I think the market is a little worried with some of the GLP-1 loss potential revenue, as well as some of their margins are eroding a little bit. But we can talk about that in later videos because we'll cover HIMS from now on. But review, healthcare is changing. The next generation cares about different things. At-home personalized care. AI will help accelerate this. You got to remember the three things: accessibility, personalization, and I forgot the third one, affordability. Product diversification. HIMS started as, basically a pill company for sex awareness, sex health, or whatever you want to call it. They're expanding. They're not just that company anymore. They're hitting more categories. Their TAM is exploding. And so we need to remember this. They are going to take a hit from the GLP-1s, but I think they will recover when they find some ways around it. And revenue still has a couple years, I do believe, of 50+% growth. I don't think they're going to hit that 100% growth anymore, but 50% growth and improving return on equity, return on assets, net income growth, this company is still going to be undervalued and a good bet for the next couple years. Let's get a couple other things. A couple things I want to highlight here. I'm actually going to jump to insiders. We do see insider selling a lot. I would too if the stock went up 180% in 2 months. I don't think it's a big deal. People are taking the profits as they should. And we see the same thing here. I looked through all these filings for the fours. These are basically people who in the company, everyone is taking their options and turning them into cash at a really low share price and selling them. I would too, make hundreds of percents on your stock options. And last, we have a lot of mixed buying right now, right? We have $1 billion bought, 800 million outflows, so still positive, but we're seeing a mix here. I think it's just because the stock has gone up so much that there's a mix. But going back to here, we do have some big buyers late last year. I don't think they're going to sell out with this jump up. I think they're going to be long-term holders. You have things like BlackRock, Vanguard. These are the guys you want to start seeing pile into this stock. They're going to help push it up in the long term. Let's go to the charts. This chart honestly doesn't have too much of a story, if I'm really honest, just because it's gone so vertical. The main thing I want to highlight here is that from January 1st, the stock at the peak was up 200%. 200% in 2 months is insane, guys. This stock has to come back. Even at the current price, $42 after hours, the stock is still up 70% in 2 months. The stock needs to chill out for a while. This stock is not going to explode higher anytime soon. So let's kind of start looking at some of those prices we should be paying attention to now. First thing I want to highlight, RSI. It was oversold for a while, right? Basically all the year. We're coming back. Like I said, it needs to reset a bit. I honestly would like this to come down a bit more. This is not turning in after hours, so that daily is probably more at the 30s, if not at, starting to get oversold. So I might start to consider a position here. If this can drop down below 40, there is big support at 40, about 41.50. That's about where it was low in after hours. You kind of see this consolidation zone right here. If we break below 40, we don't have too much more support here, 38 to 37. It's pretty slim support. Whenever you see a stock with these big green candles, it typically means there's not much support in that zone. I'll give you a deeper example here. We have the 40 about here, right? And we just see it steps showing up. So like I said, a little bit of support at 38, but then you have all the way down at 35. And that's where I want to show you on the daily. So when we go to the daily, we have the 50-day at 35. If this stock goes back to 35, this is not financial advice, but you want to consider purchasing here. Back here, we hit 35 and rejected. I would love for it to come back there. That would be absolutely amazing, and I would definitely think about starting a position here. We broke below this trend line, so this trend line is, essentially doesn't matter anymore. So we have the secondary trend line. The secondary trend line, if it came down, I think we actually currently broke below it. Let's put us at where the price is currently right here. So we're not below it yet. Like I said, a lot of support. I'll just call it 38 to 42 zone. Let's see if it holds. But like I said, I would love for this stock to come down a little bit lower. I missed out. I was thinking about buying it at 25 towards the beginning of the year, and I got scared, and I should have just made the bet, and I should have been a little more disciplined there. But that's okay. You miss them, you got to move forward. And so, again, if it holds 40, it's probably not going lower. If so, we're looking for this 35 to 38 range. I think that's a pretty safe. And then we just want to see this go sideways for a little bit. Like, I want it to knock around. It needs to catch up to its valuation. This might be worth like 45 right now if we were to do some math on the stock. But I would really love it to come down to this 35 range. I think 35 is where you're buying it undervalued. But we need to keep an eye on this stock. Guys, that's HIMS. We're going to continue to cover it on this channel. Let me know what you think. HIMS has a bright future. I do believe it's the healthcare stock of the next generation. And until next time, succeed in the markets. Let's do it together.